thank Rainer for having given his view in a very concise way, and also has expressed these analysis with the 6 paradoxes that definitely depict the picture and offer the framework where we have to play. I ask now Wolfgang Munchau to join our discussion, our debate, and then we will try to make some conclusion, have the speech of the Vice President of the Chamber, and then we will open our roundtable.
Marcello, thank you for the introduction, and thank you for the invitation to speak here. I'm a Hegelian, so I'd like to try the synthesis, but synthesis might not necessarily be a solution. It might not necessarily be nice. So let me start with R minus G, and let's just talk about numbers, what it takes to be debt sustainable in the current system. If Italy had its own central bank, if it was an independent country, we wouldn't be here. We could basically say 135% debt isn't that big a deal. In an advanced economy, Japan has more. Italy could probably take on even more debt. It would be in a very different environment. But that is not the situation in which we're in. Italy doesn't have its own independent central bank. We are all subject to the ECB's, its rules, and the various legal and political constraints. Let's just look at what it takes for a debt level of just over 130, 133, just increased by a little bit after the bank rescue, for that to be sustainable in the long run. And it's hard to be, it's hard to say that precisely because we're dealing with nominal quantities. Obviously, the debt level is nominal, and the nominal growth has 2 components: it's the real growth and it's the inflation. And we have been off our inflation target for a very long time, off the main inflation target for 4 years. Core inflation is the one that I tend to look at because it gives me a much more solid development, and it takes out not only the energy and the volatiles, but it tells us what's happening in the economy. It's very sticky, doesn't move about. Core inflation has been off the target, if we take the target as 2%, since 2008. We have been below 1% for a very long time, I think 4.5 or 5 years. There is a possibility that we might have settled at a much lower inflation rate in the Eurozone permanently. I know Mario Draghi is very positive about the inflation rate adjusting eventually, but this may not happen. So if inflation were to be at 1%, the question is, Italian growth is now close to the peak of the cycle. We may be at the peak or close to the peak, but this is 1%. So you're looking at a nominal growth rate of 2% maybe at the top of the cycle. And if this, unless, if we're going back to the previous cyclical experience, going back to the midterms of the cycle, we might be less than 2% nominal growth, and at those rates, one has to say clearly, Italian debt is not sustainable. That would mean that Italy is insolvent. That's basically the less polite way of saying that. If one assumes all the current constraints, not the policy solutions that anyone is suggesting, no defaults or bank restructuring, no policy changes in the Eurozone, no governance changes in the Eurozone. If you just took it mathematically and accepted a negative or a current scenario for the future trajectory of nominal growth. Now, it depends on the interest rate. If the interest rate remains low forever, if we can have 0 interest rates, then obviously any level of debt is sustainable. That is true. But the one point where I agree with Jochen is my expectation that the ECB will taper next year, and that it will try to normalize interest rates at some point next year as well, so that the external interest rate environment. Don't think it's the right thing to do, but I think it will happen. That interest rates will probably go up at the second part of next year, and that the negative rates policy will be abandoned, and there will be a degree of normalization as economic growth, not inflation, but economic growth rates become more stable. So the question is, how do we get out of this scenario of insolvency? Because that would indeed be a catastrophe for both Italy and the Eurozone. And we've heard two different proposals. And the problem with each, and I'm personally closer to Marcello than to Jochen on this issue, and I've argued, I've basically spent, and the Financial Times have been writing about the Eurozone, lately more about Brexit, but, until very recently about the Eurozone. I've been kind of solving the Eurozone crisis every week. It's easy to solve it on a piece of paper, because you can make proposals. I supported the blue bond proposal, which would have created a big stock of Eurozone debt. It wasn't perfect, but it was at least interlinked with the. I always thought the 60% debt ratio was crazy, but it's there. It's in the treaty. You might as well work with it, and taking out the first 60% and take it. Produce a Eurozone bond seemed perfectly sensible to me. You would have a big stock of debt, and then you can go forward with a Eurozone budget and a Eurozone debt instrument. That has been rejected. And if I look at the politics, even with Macron in France, I see no political readiness in Germany, not even on the left side of the political faction. I see no readiness in Germany to accept even the Macron agenda as it is, which is not a backward. Doesn't affect legacy debt. It's only affecting forward debt. Forward debt, there may be an acceptance. So no action on legacy debt. There won't be any SBs. There won't be any. Not the redemption bond won't happen either. It was also rejected by the German government. Not that it would have solved the problem. It would have been an austerity vehicle. It would have delivered 25 years of permanent austerity to basically get rid of all the debt in that period of time. I think this is a crazy idea, but it's not going to happen. Germany is not prepared for that. Politically, simply not prepared for big issues on debt redemption. Germany will not accept to deposit insurance. It's not going to happen either. This is the banking union was built on a lie. The lie was that it had three legs. The first leg was supervision. The second leg was resolution, harmonization. It's not really a common resolution, because the resolution authorities is vastly underfunded. We cannot resolve big banks. Should ever a large European bank, not necessarily in Italy but in another country, fail, it will not be it will not be resolved at EU level. It will be resolved at national level, and the deposit insurance will not happen. That's simply, and it's. I can also understand to a limited degree if you're in a position where you have this disparity. Those who have a reasonably healthy banking system would consider deposit insurance as insurance after the accident. Deposit insurance would have been a great idea if we'd done it in 1999, but having these imbalances work through the system for such a long period of time. It is indeed a hidden, and I think it should be, but it is indeed a hidden transfer. It would be a transfer, and we can't ultimately get around the fact that if you are in a monetary union with such massive imbalances, you need transfers. It is a very normal thing that this will ultimately have to happen. The question is how you organize them. I don't think you can organize them from state to state, but at some federal level. So. The German solution is to allow default, which is the proposal by the German finance minister. He wants to turn the ESM into a European Monetary Fund. Obviously, the various constraints in the Eurozone. Obviously, we have no bailout. That means we need to find a system for governments to default on their debt. That's very much embraced by the Germans. I don't think it will be acceptable to the Italians, the idea of having some kind of sovereign debt resolution mechanism. It would be, it would put Italy in a very similar position vis-a-vis the Eurozone as Greece is now in a sort of a state of permanent supervision, almost a colonial status. I don't think this will happen. I don't think it will be, and it should be acceptable to Italy. So a lot of the solutions that people are putting forward make sense in their domestic context. And you know, the proposal by the German Council for Economic Advisors is very much inside the German, you know, follows German views on what the Eurozone should be like. I don't think it will happen because it is simply not the way. It's simply not the way this, you know, this is not going to be accepted by the other countries. It will be accepted by other northern countries maybe, but I don't think Italy will accept a proposal that would put itself at such a disadvantage. The same goes for the zero, for the re-rating of sovereign debt on bank balance sheets. You know, I'd be very surprised if Italy accepted a change that that would be risk-weighted, even though, you know, one could make a very strong economic case for that. You know, these things. So we are in a situation where whatever solutions, and I don't think whether any of them are genuine solutions. I think the only solution to the Eurozone is genuinely mutualization of debt in a big way, and a lot of these other things are sort of partial solutions or some maybe even pseudo solutions, but you know, it's not going to solve the fundamental imbalances that one country has a current account surplus of 10%, and the others have reduced their current account deficits through a depression. That is an unsustainable state of affairs. So the question is, how does it end? And you know, one can't completely exclude that it ends badly if there isn't a solution. And one of the dangers, or if you call it a danger, but one of the scenarios you might come to conclude is that there may come a point at which countries consider it rationally to their advantage to leave the Eurozone. Not because by leaving the Eurozone they gain some trade advantage. That is not an issue. For example, take this country. The main advantage for Italy would not be, I mean, the trade. Italy doesn't have a current account deficit, so that isn't the issue. But the issue would be simply to no longer to be constrained by policies that may make no sense. Now, I don't predict this will happen. I don't say it will happen. I'm merely saying that a state in which those, you know, contradictions are not resolved and where imbalances persist and increase will ultimately get us to the position where a country, and it may not be this country, it could be another country, but where a country concludes with perfectly rational arguments. This is not like a Eurosceptic, not a populist argument, where a rational person concludes we would be better off outside. Now, it didn't happen in Greece. I wondered, you know, I thought there was a moment in 2015 when in Greece it might have happened. But Greece was not prepared. Is the other thing. You cannot, if you're not prepared for these steps, you know, you may just be caught out. You know, I think bigger countries operate differently than smaller countries in this respect. The ability to be colonialized, so to speak, in an economic sense is the propensity is stronger for smaller countries than for larger countries. I don't think that could have happened to Italy quite so easily. What happened to Greece doesn't make sense. For Greece went through the adjustment through austerity. The thing about austerity is you know, if you do it for long enough, I mean, you can adjust, you can get rid of your deficits, you can have a primary surplus of 3%, 3.5%. You could be basket case for the rest of your life, but I mean, yes, it is possible. You are solvent but dead. It's a combination that works. At least that's what say it's a combination that's internally consistent. It's not politically, economically desirable by any means. It's certainly not optimal. My recommendation at the time was for Greece at least to consider a parallel currency. So this might be a solution at some point for currency or parallel payment systems where countries use, you know, other debt-raising mechanisms outside the official sector, where they can basically, you know, you can pay, you know, you have domestic debts that you raise. You know, it would not be euro debt, it would be other forms of debt that you raise internally, and you may turn some of these debt instruments into payment systems. There have been various, you know, such instruments linked to future tax liabilities. There are various possibilities one can do. So technology might provide us with some answer. It's not what this was supposed to be. I mean, the idea of a single monetary area was not supposed to give us these sort of local pseudo currencies, and that is that would probably be preferable to a complete and utter and devastating breakup of the Eurozone, which obviously an Italian exit from the Eurozone would entail. This would be a catastrophic development, not just for this country, but in particular for the Eurozone. I would have thought that because it would produce a significant financial crisis, and it's not even clear whether the political consensus at the time would then still hold to continue with the project after such an event. So I would like to finish this now because we're going to have a discussion on these matters. But what I have observed in this, and I've been following this discussion for a long time, there are loads and loads of proposals. I have not yet heard a proposal that would both work and is politically acceptable at this stage. None of what was presented today. And that is what worries me, and that tells me that it will ultimately, something will have to happen for that to happen, or something it won't happen. These are the two alternatives. Either some politics will change at some point, and I've always thought that if Germany is ultimately threatened with a mass default, Germany has massive claims abroad. Eventually there is a point at which Germany might just say, look, I mean, we have to do this, because if we don't, we suffer the biggest loss of value probably anyone's ever suffered in history. But it's not clear that this would happen. It's not clear. Germany might just say, okay, we'll better cut our losses and go from here. It's just, the political preferences are very hard to predict. So I would not rule out the possibility that things that we end up in another crisis within a foreseeable period of time. Thank you very much.